final presenter, last but certainly no means least, is Paul Mattick, who is Head of Sales and Private Investor Relations at Mercia. But in this case, I think he's talking about the Northern VCTs, which we've had a few sort of newer ones. These are definitely not new VCTs. So I will hand over to Paul.
Unusual in this environment, and that the rest of the VCTs are presented to be the new entrants, whereas Mercia and the Northern VCTs have been around for a long time. In fact, around 25 years. We're turn of last century, the first VCT launched. So we'll walk you through what we're doing at Northern VCT. We've actually got an offer out at the moment, which I'll refer to later on. But as you will, everyone else has shown a risk slide. So of course, we're actually aiming this at financial advisors, this presentation. So yeah, treat it in that way. These are high risk investments, and there's a disclaimer at the bottom. So I'm one of the directors at Mercia Fund Management, which covers the Northern VCTs. It manages the contracts for the Northern VCTs. And there's 3 separate VCTs. I'll be referring mostly to the Northern Venture Trust, which is the oldest and most established, but just at the highest level, the 3 VCTs are pretty much the same. So I think it's 95% the same portfolio, and they're investing alongside each other in every deal that we do. But I think it's quite useful. The other VCTs are talking about what they're going to do, and maybe 10 to 50 million AUM. We're 416 million AUM, one of the most established VCTs, as I mentioned. We've got a long-term track record. You can see those stats on the left in terms of 1, 3, 5 years and 10 years track record as well. And that provides very good historical track record to point against from what our investment teams have been doing. I think there's also something we haven't really talked about yet around the tax side, but on the 1 year, Northern VCTs, Northern Venture Trust, it's 7%, great. But actually, if you think about the 30% income tax relief at the front and also the tax-free dividends, then you'll actually get a gross equivalent yield of 16.5 for additional rate taxpayer. So 5-7% in terms of dividends doesn't sound particularly exciting, but then actually when you think about it from the broader context, then actually these are pretty spicy investments, really, both on the risk side, but on the return side as well. So that's just the starting point of what we have done. We have got a £50 million offer out there. It's been up for about 6 weeks now, and I think we're just under £40 million filled in the last, say, 6 weeks. If you're going to move really quickly, we have our interim close, which is 5 o'clock today. And that enables interim shares to be allotted before the budget on the 25th, before the 26th, where the budget is. I don't think there's anything nasty going to come in the budget. I'm happy to talk about that later. I'm sure that's one of the follow-up questions. But we're thinking we're going to do an allotment anyway, so we'll put it just before the budget rather than after. And kind of industry standard process and operations. In terms of Mercia, the broader group, so Mercia manages the Northern VCTs, 2 billion AUM, of which 416 is on the Northern VCTs, plus the offer which we've got live now. And so you can see it's a significant part of what we do within venture. And alongside, been lots of references to EIS today, but we kind of, where we operate is anything kind of pre-Series A is EIS, post-Series A is VCT, simplistically. And that's how there is some overlap for us, but minimal. So I think like less than 10 companies out of the 64 companies in the portfolio. So there is minimal overlap between the 2 strategies, and we kind of see them as different pools of capital, different strategies. There is some overlap, but they are different for us. In terms of how we do it, we are, as others are in the market as well, we are very much a regional investor. You can see on the map here all of our deals we've done. So there are an awful lot of deals around in the north, Manchester, Liverpool, Leeds. We've got a big presence up there. We've got 11 offices around the country. And we do obviously do deals in London. And Yeah, for the VCT, it is a national investor, the regional focus. So it's we are Mercia and Northern are both referenced into the southeast areas, but we do look across the country for the best deals. And you can see some of the deals we've done on the right here. And some names you'll know, many names you'll will maybe not. But Harrogate Springwater was one of the ones which you'll recognise, I'm sure. Maybe Pure Pet Food, and I'll talk about one of them, the Beauty Tech Group, which was acquired the current body in the top right later on, which definitely thinks a product that we could all use. It reduces wrinkles. So I think that's been, yeah, I referenced that later on, but there's the type of things we do cross consumer software and healthcare. So we'll talk about that later on. In terms of Mercia, we are one of the most active investors in the UK and actually potentially in Europe at the venture side. So I think that's probably understood already. Deployed about 300 million from the group last year. In terms of the VCT, it is the timeless investment philosophy you'll hear about before and again. So looking at the A-star teams and solving large and valuable problems. Yeah, so I think many of these things on the left is quite all the large VCTs established will be doing. We, as I say, we are investing probably a little bit later stage than the other VCTs on this call. But capital efficiency is always something that comes up again and again and again. We don't necessarily want to be putting lots and lots of money into a company and to get diluted in the future and get a reasonable exit. We want to get something which we can put some money in and then it can grow very well subsequently to give us a good outcomes. And I'll talk about some of the exits we've done. So and then they're not all positive, and it is, say, a venture capital trust. So venture capital, you do expect failures. But actually on the longer term, as you can see by the performance figures earlier on, does come out pretty well. But what do the Northern VCTs invest into? So we're looking at kind of 6 to 8 companies per year, new investments between 3 and 10 million. Series A, as I said, and afterwards, and building out a decent position of equity ownership in those companies. We will do follow-ons as well, obviously, but we're looking to find new companies. We deploy 50, 60 million from the VCT into portfolio companies in this year, and hence we're raising 50 million, maybe more in subsequent years. We're going to go into the market every year and raise a significant size offer. In terms of sectors, I'm not going to go into too much detail, but software and AI, the Mercia Group has been in AI for a long time. We actually were one of the first investors into a company called Blue Prism, which was doing AI before AI was called that. So, and had a kind of 100x return out of that. And health and life sciences, that's probably what we're probably more known for. We've been investing into that space for a long time. We've got a lot of expertise in that space. Consumer is obviously the cost of living crisis of the last few years did tamper down what was going on in the consumer space, but people seem to have more money in their pockets nowadays and are able to purchase kind of luxury goods and holidays and things. And I'll talk about a few things like that in a minute. And deep tech's come up a few times. It's a little bit more ethereal, but it's more of the stuff that's underneath the hood. And we've got the various investments in that size. It's a smaller part of our investment strategy, but that's lining up with some of our other investments across the Mercia Group. We mentioned the sectors already, but you can see across. So software and AI is almost half of what we're doing. And then health and life sciences, 20%, consumer 25%, and deep tech other are small amounts. So but I would expect see more coming into healthcare and probably consumer as well, whereas software and AI, we're probably going to rebalance that down slightly over the next period, partly the valuations point, which I'm sure we'll pick up on later on. You can see that there are still some pre-2015 investments in our portfolio, but not many nowadays. We've sold them down over the last 5 years or so, and almost all of our investments are unquoted. I'll talk about one that's just gone unquoted in a minute, which I already referenced in a minute. This is the 31st of March data. There's end of September data coming up before too long. So I said there's 64 companies across the portfolios. I would basically say that the 3 VCTs are almost identical. They've got actually slightly different share prices and slightly different dividend targets, but basically 5% dividend target across the board and delivering that. So the Beauty Tech Group, I'll come back to that one later on. I've already referenced it. Pure pet food, and you kind of understand what that does. And you can see we've built out a bit of position of the VCT in that, and Rocker Pimbley. So you see it's all quite diverse, and some of the more established VCTs may see a big position in one company or another, whereas we're quite diverse, which helps with the risk reduction in many ways. There's a few exits which I'll refer to just briefly. Gentronics for nice 4.5x. It was great. It's quite an old holding, but good outcome in the end. Climbing Hanger was one of those ones which didn't quite go quite to plan, and we did hit the limits for VCT, which is a challenge. So there are limits. You can invest into a company across state aid, which I know Brian knows well, and we can talk about if it needs to be. But that we did end up having a good exit in that in the end because it was at risk of failing totally, but some had a decent outcome. And that's across these are just the NVT rather than all three VCTs. We put sort of more money into across each of these companies, but I'm not going to spend too much. Just to see on the right hand side, we do get zeros, write-offs. We do try and recover some money from any exits we get, but some cases it's just not possible, and that's to be expected. But this is one of the good news stories. So this LED lights, so I say Brian doesn't really need this at all, but maybe I do and other people. But think about Kim Kardashian and such. This is it's a big consumer brand, and it's kind of reducing the wrinkles by shining LED lights on. I know some people within the people my friends group do use these. And we invested into the company in 2018. At that point, it had an £8 million revenue. We just listed it onto the LSE, London Stock Exchange, not on AIM, so the main market. It's about 140 million revenue and 300 million valuation, and it's up 10% today. So these are the sort of things you can do when you've been investing for a while at scale, and it's a great outcome for a UK business, and it's great to see. This is the sort of thing, and hopefully listing companies onto the main market may open up the LSE and hopefully see some good upward trajectory in the coming months, whatever happens in the budget. But I think that capital markets is quite a challenge in many ways, but we have realised a third of the investment, and we're going to be looking at the timeline to sell down the rest of the shares. But good example of a great success story within VCT investment. Briefly talking about dividends, we've been paying dividends for 25 years. And actually last year we increased on NAV as well as paying dividends, so which I think is quite unusual. So we're keen to keep on NAV going up or flat to up, as well as paying out that 5+% in dividend. And I think that's what you can kind of think of Mercia and think of Northern VCTs, and this is kind of what we do, flat to increasing NAV and 5% plus on dividend. And looking forward, we have got great deal flow. We will deploy 50, 60 million into portfolio companies this year. We'll come back to the market next year to raise more. We're always trying to be very careful about the pricing which we get into these investments. And we've got a very big network within Mercia to help build value within these portfolio companies, and hence we're able to generate those returns through exits. And yeah, I think that's a pretty exciting place to say. We've got about 10 million left of the 50 million which we're raising across the three VCTs. As Brian mentioned earlier on, we have closed N2 VCT, so we've got Northern Venture Trust and N3 VCT, so with between them about 10 million left. I doubt anyone's going to be able to move for the end of the day in about 4 hours' time, whatever it is. But if you can get applications and cash in by then, you can qualify for the shares allotted on the 25th, and hence also qualify for the interim dividend in January. But going on to something a little bit more contentious, yes, the budget's coming up next week, but actually if you look at last year's budget and before that, we had these tax efficient strategies. Yes, ISA and pensions seem very different to the other strategies that we talk about and know well. But actually what I'm kind of seeing following 2024, we're seeing this from advisors. There is a bit of a squeeze on pensions and BR AIM because they're coming into IHT and in more inheritance tax liabilities. And I do think there'll be more money flowing into VCT and potentially EIS as well. I think that dynamic is quite interesting at this stage. And I think I'm kind of hoping that Rachel Reeves' plan is to kind of take money from various places and put them into UK companies via EIS and VCT. So that's my hope, or perhaps that's just a side effect. But on that note, I think that's all I have to say. Happy to answer any questions that you may have.
Thank you for that, Paul. And you've definitely been using that beauty face mask. One of the questions in, and I guess it follows on from what we've seen the last couple of years of the VCTs with some of the managers and consolidating the number of VCTs they have. And the question is around, given that there's a huge amount of overlap in the investments of the 3 Northern VCTs, why don't you merge them to reduce costs?
It's a fair point that there are some, they're actually not as large as you'd expect, but there is some economies of scale by having less VCTs. And we have talked about this, and we'll keep considering it. But at this stage, historically, as I'm sure you know, that you can only invest a limited amount from each VCT. Hence, a lot of the market have multiple VCTs invested side by side, and it is partly a historic quirk. But I think we also see many advisors, financial advisors, who decide to allocate across all 3 to get more diversification. I have questions around that, if that's actually real diversification, because it's the same portfolio company through the same manager with different trust structures. But that is one of the approaches that very many people do, because by default you get allocated across all the open VCTs. But yes, Steve, it is something we're thinking about, and we're on the case. But I don't think we. Well, I think it's a question we get asked quite regularly, and there is value of having multiple VCTs in terms of governance, because there's 3 sets of directors on those VCT boards have different experiences and different perspectives on the risks around the raises and the investments. So I don't think it's something we should ignore, but I can see some benefits in merging at some point.
Cool, makes sense. And then I guess it follows on from that to a degree, the raise amounts, and obviously N2's closed already because there is a smaller allocation in this raise to N2. How do you go about deciding that? Is it more to balance them so they're about the same, or is it a completely different approach?
Well, it actually references the previous statement in terms of the independence of the boards. So actually, we've got 3 independent boards across those VCTs, and they are actually very independent, which is not always the case, I would say. And they have some different strategies, and sometimes one's got a lower dividend target. N3 has got a 4.5 dividend target rather than 5%. The other 2. And so there are some differences in kind of the wrapper itself. And sometimes the boards decide they want to raise. So we recommended that we raised 20 across each VCT, and N2 said no, we'll only need to raise 10. So that's what happened. And so I think that governance point of independence is relevant here. But then we obviously looking at the cash amounts, and if we're investing across all 3 VCTs into one company, have to be cognizant of the relative amount of cash in each VCT, but that's just an operational point. But yeah, I think in due course we will be we're deploying more, we'll be raising more, and trying to service. There's a lot of demand out there, so I think we will fill our VCT within 2-3 months, definitely. But and that at 50 million, and I think because we're recognised to be one of the great market leader investors. So, but yeah, thank you.
Thank you very much, everybody, and we'll see you next time.